Hi and welcome to the Market Alert for Friday, the 9th of September 2022. So negative delta squeeze sustained stocks, so NATO hammers rates higher, so yields up once more. ECB hiked their rates yesterday by 75 basis points, which was expected, and also expects to raise rates further to dampen demand. And the US stocks notch mild gains despite hawkish central bank activity. So despite the fact that all central banks, not all, I suppose all of them are, but yesterday mainly the ECB and the Fed continued this hawkish narrative to continue to increase interest rates. Stocks closed firmer, shaking off ECB and Powell hawkishness. So yeah, they're just ignoring it and moving prices higher. And now, of course, now this is out of the way, then today they are free to move the markets to the upside, barring any geopolitical bad news. The gas is still turned off and no sign of it being turned back on. And rates are going up. And so is the stock market. So there you go. No major news today at all. Lagarde speaking at 10:30 a.m. as an EU economic summit, and then there's a couple out of the Fed later. Amazing, even Lagarde's being downgraded, which is not a bad thing anyway, but so Lagarde speaking at 10:30 a.m. Gold-silver ratio is plummeting as the price of silver is being allowed to move to the upside as the dollar weakens overnight. So starting off with the Dow, you can see yesterday the market moving to the upside as prices head back to, I think this was Friday, wasn't it, of last week? Yep. There to 89% retracement. Probably have no doubt sailing through this and then moving up to the next 89% retracement, which is up here at 32,214 for the Dow. So we've got the 289s, we've got this one, that's 78 there, isn't it? 62. Let me just remove these other ones. Yeah, so we've got this target here, and then we've got this one here. They're the sort of the main figures you want to take note of for the Dow moving to the upside there. 30-minute Dow, we can see the market reaction when it opened. It then moved higher, had another sell-off, and stopped at the DP. And then it was just a one-way bet all the way. And we're also above yesterday's high already, which is going to be some form of support. And as I mentioned yesterday, that the high is a very important, just as is the low. And you see how the high held the market there when they came back, shook everybody out, and then moved up. And again, you can see DP 200 MA there where the market stopped. In the German DAX, sideways to higher above the 5-bar moving average. This is we've got 3 days of green, market closing back above the 5-bar moving average and still looking that way as well. If we just want to draw in from this high to this low, you'll see the 89% there is 13,000. I'll just draw that over, 13,017. Now 13,000 is very, very important for this market. I don't know why, but it is. And the market is currently 12,920-ish in that area, but expect the market to attack that and sit above it during today. There you can see we must have the high in there somewhere. There it is. There's the high for yesterday. We went above 13,000, tried to hold, as you can see there, but then moved sharply to the downside. That was purely because of the ECB raising rates, so they brought the market down and then they were able to bring it back to more or less where they wanted it. But the 13,000 level is very important, and also if this is taken out, then yesterday's high will be attacked as well. In the 5-minute chart for yesterday, you'll see that we kicked off with the futures market moving higher. We then traded sideways until the DAX opened. I went short on this, got out at the DP, which is a bit too early, but the market sat and hugged the DP level there before moving lower. Then you've got the market's reaction to the 75 basis points. You've got the Dow opening, and then the consumer news as well. And then, of course, the Dow moved higher and the DAX followed suit there. Big move up there. So just under 100 points in less than 5 minutes. And then the market just continuing to move higher. Again, you can see the demand here as the market sits on the 20 bar moving average. And then once it breaks out, you don't see any more red bars until a good hour or so into the trading session when the market moved back. And then, of course, has since moved back to the upside. Where you can see prices are still strongly to the upside at the moment. The week so far is 41521 and a profit factor of 7.48, and we're looking at 70 to 30 win-loss ratio there. Might not be at the desk today as I will be out, but so I'll have a look at the trade first thing. But see what happens anyway. But I suspect there's no other economic news, and they've already discounted the ECB and Powell. So really, any shorts will have to be from a geopolitical standpoint to actually move prices lower. And in the S&P, you can see prices continue to move to the upside. We're more or less at Friday's high there, just through it, 4,018. For the S&P. Watch the 50 EMA as well for resistance, and if we continue higher, then from this high to here, you'll see that 89, 40-50 ties in with the 50 bar moving average there. Yesterday, you can see the market didn't do a lot until we had the rate increase, then the Dow and the S&P cash opened. Big retracement there of 89% before the market then moved to the upside. In the UK, you can see their prices going back above the 5 bar moving average despite being down to begin with, and up on the overnight also. You'll see there we're at 78%. Watch the 89, 7308. And in the 30-minute chart, you'll see that we followed the German market down to the low. Low is really important in a market. Look at the amount of volume oversold. Straight reversal within 30 minutes, pull back, and then all the way up overnight as well, as you can see there, through yesterday's high as well. So watch the high become a support for this market. If it breaks it, then we're likely to see the DP tested, but we've got the averages to get through beforehand. In the currencies, the yen is still stuck in the sideways range after double topping at this level here, which was, let's just draw this in for you, 166314. And coming back below the 89% retracement that we have drawn in here. So a bit of weakness around in the yen. Yesterday, market was down, then it just traded in a sideways range. It managed to break out overnight and then was slammed as the US dollar also lower overnight as well through the DP at the moment. Interestingly enough, the pound is recovering quite well off that. Let's go to the monthly chart. Off the target that we had in there for months at 114, and you can see they're coming off there quite nicely in the daily chart. So it's also an 89, below 89%. We had this retracement tested, as you can see there, demand yesterday and now moving back to the upside. 30-minute chart, you can see this with the market up, then down, and then here you can see we get an 89% retracement with the momentum starting to move to the upside, crossover in stochastics and demand, where they subtly bought into the market, took it back to the 200 MA, but overnight the dollar moving sharply lower and the pound moving higher there, as you can see. Taking out yesterday's high, so when you pull back, watch the high as it becomes part of support. Also note, again, no red bars in the way, the momentum very strong. It's only in the last hour and a half that this has started to actually slow down a bit from the Asian trading. And in silver, continuing to move to the upside there, we're getting to overbought, also just through 62% retracement and the 20 bar moving average. These are the upside targets taking you back to $19 an ounce, which is a pitiful price, frankly, given the backdrop of everything. So yeah, we'll see what happens there. 30-minute silver, as you see yesterday, the usual slam, but has managed to move overnight as the dollar has moved lower. Speaking of the dollar, before we look at gold, you can see there, this is what's happening at the moment, hence why you're seeing gold and silver moving to the upside. And obviously this is a pattern as well that we've seen a lot of, where the dollar is marked down before Powell actually increases rates, and then it generally moves to the upside thereafter. And that's going to be on this coming Wednesday, if I recall. We'll look at that more on Monday. In the gold market, also moving to the upside, but not as strong as silver, which is why you're seeing the gold-silver ratio slide. The price has moved higher, but not as fast as silver has, which is why you see that disparity. And they're dropping off of the gold-silver ratio. Just to remind you, this is what it looks like. You can see it there dropping quite sharply from the high of 96 down to currently 91.46 there. And finally, crude oil finding some demand during yesterday. It's oversold, so expect a bit of a bounce in this market. Upside targets for this from a fib point of view will be this. There are the levels that you could expect in this market. Okay, so as I said at the outset, the market's already discounted the ECB, the Fed. That doesn't automatically mean that it's going to move to the upside, but what is there to actually send it lower when we had the rate increase yesterday and the hawkishness speak from the Fed and the other Fed members? Then really there's not a lot, is there? So they'll keep the market moving until they actually get around to increasing rates this coming Wednesday, and then obviously you'll see further weakness come back. But at the moment, no sign of the gas coming back on in Europe, and despite all the negative narratives surrounding inflation, war, etc., the market defies gravity once more. Okay, that's it for this one. If there's anything to report, I'll let you know. But otherwise, as ever, have a great weekend, and thanks for watching.